Does Pinterest have hundreds of percent upside from here? I'd argue that Elliott Investment Management, an activist investor, which is rumored to have over a 9% stake in Pinterest. They haven't filed that yet, though, which is a little bit surprising, though they have disclosed, Elliott has disclosed they are the largest shareholder. So it's possible that they're under 5%. Either way, you're probably talking around $1 billion position. They've made a large bet on Pinterest, probably saying, yeah, this company can be worth 100, 200, maybe even 300% upside from here. So we're going to talk about that aspect in this video, along with the latest developments from Pinterest stock. The question is, should you potentially join Elliott with their latest bet on Pinterest? You also see new management, new CEO, the prior founder CEO sort of stepping back into sort of a chairman role, looking at Bill Reddy, the new CEO, joining Pinterest. He previously helped run Braintree, which was later acquired by PayPal, and he also helped oversee the commerce initiatives from Google. So he's very interested in the space. Now he's the new CEO at Pinterest, but it's going to take some time to see, what are the decisions he's making. It's very early stages for him. When I look at Pinterest, it is interesting. This is the type of thing I want to see, which is that I'm looking at a valuation that's below the fear levels of COVID. When you looked at the March 2020 lows in terms of a price to sales multiple, you're now looking at a multiple that looks like it's around the same level, slightly lower. So when I see something like that, I go, okay, unless the business is impaired, does this mean that this is an incredibly attractive opportunity? Or does this mean, it's also possible that the growth story has changed dramatically? So I want to check both of those aspects. We'll talk about that in this video. And so the core crux of, what are you talking about with Pinterest? You have pinners, several 100 million people using the website. You, let's say, pin a concept. Okay, I want to, have a summer party, summer cocktail party, have some friends over. You start pinning various different ideas that you see and like. Grapefruit rosemary smash cocktail. That would be great for my party. And then this data, because it's pinned to your board, then it goes to all these, let's say, major advertisers, major, let's say, grocery shopping centers that might say, oh, you're interested in grapefruit rosemary smash cocktail? We have the ingredients that will make your summer smash party a hit. And so you do have this direct correlation with the advertising and what you're pinning that could be very relevant. And you look at the business and you see that they are still growing, 9% growth globally, 7% US, 71% rest of world, but it's still very, very tiny relative to, let's say, US and Canada, which is 542 million versus these sort of smaller segments, rest of world, 22 million. So very, very tiny. Now, this is the red flag for me personally, looking at how effectively this business is declining. Yes, revenue's growing, but the amount of users is declining. Year over year, down 5% across the board. Then, spread, you could see it's pretty much all their different regions, 8% decline in US and Canada. And that's particularly harsh because this is probably where most of their economics come from. As I just showed in the last slide, Europe down 4%, rest of the world down 3%. So the question is sort of what's driving that? Management calls out really three different things. One is lower traffic search from Google's algorithm, saying, hey, Google's algorithm updated in November 2021. That has hurt their results. So the question is like, hey, how can they remedy that? People just aren't searching for them as much. They also talked about how during the pandemic, more people were sort of stuck inside. So more people were doing things online like Pinterest. So there's now this pandemic unwind. And then the third key component is that they're talking about impact of competition. Now, it's not real like-for-like competition with Pinterest. It's more competition of share of time spent from video-centric platforms. I think what they're really talking about here is more folks are using platforms like TikTok, and the TikTok algorithm. I refuse to download it for my phone. It's just like, I think they've mastered the ability to put like a parasite into your brain and like suck your brain into the screen where you're like, oh, more dancing cat videos. I gotta watch that or something ridiculous. You get my point. If TikTok is gaining share, which they clearly are, does that mean people are spending less time on platforms like Pinterest? And that's clearly what they're seeing in terms of the monthly active users. Despite this sort of sluggish revenue growth and declining core number of users, they're just going full steam into let's grow this business in terms of investing into new initiatives. And this is, I think, something clearly the new CEO Bill Reddy is going to have to look at, because, growing your operating expenses this fast, year over year, 20 to 30% plus, that is going to eat into your core profitability. And you're seeing their adjusted EBITDA. They did have a nice bump in EBITDA last year. Now you're seeing that unwind, cut in half, because they're really just not matching revenues to expenses. Maybe they're making investments for future growth, but look, I want to see that translate into new users and revenue growth. So clearly there's a mismatch going on here. The question is, where does Pinterest stock go from here? If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. And if you're struggling with this investment environment, consider unrivaledinvesting.com for new ideas and a community of like-minded investors. I have more details about what you can expect from unrivaledinvesting.com in the description of this video. And so let's look at what Elliott Investment Management has, because arguably they are one of the largest outside investors. They've called that out, saying, yeah, we are now the largest outside investor. And so this, if you're putting $1 billion, on the line, you clearly have a lot of conviction. What's sort of the thesis? Because you don't bet $1 billion for a 20% rally. You bet $1 billion for 100, 200, 300% gains. And so looking at this, they're saying, this is the press release. They said, Pinterest is a highly strategic business with significant potential, has led us, this has led us to become the company's largest investor. Once again, probably around $1 billion bet, maybe more, as the market leading platform at the intersection of social media, search, and commerce. This is actually a really interesting point. Like, you have social media, you have something like TikTok, you have Facebook, then you have search, so Google search where you're looking for something, or commerce, something like Amazon or let's say Shopify. And so you look at this and they're saying, well, we're sort of this perfect cross section with Pinterest, because you have social, which is you're seeing what other people are posting, and then you're searching for concepts, and then you're posting it to your board, and then you're saying to yourself, how do I actively transact with this? So I do understand I think I understand what they're saying, which is that it really is this sort of hybrid intersection of social media, search, and commerce that you don't really get with these other platforms. But I'd argue these other platforms are looking to rapidly bridge that gap, because you see companies like Shopify announce, oh yeah, we'll work with YouTube. Or you see TikTok saying, hey, we'll work with Ticketmaster to sell, so that artists can sell tickets for their concerts, straight from watching a TikTok video. So I think that gap is being filled, that bridge is being, that gap is being filled over time. The question is, can Pinterest sort of occupy this unique niche that gets more users over time? And they talk about, this unique position in the advertising and shopping ecosystem. So, it's interesting. Let's see if it'll work. Clearly Elliott is betting on a turnaround, because you're not seeing it in the results right now. You're not seeing that growth in monthly active users, or the hyper growth that I think you'd want to see, or arguably the growth that you'd need to see in order to get an attractive return from here. So I look at this, and my conclusion is that investors should consider waiting. Now, keep in mind, this is not financial advice, but the way I look at business models is, why not look for something that's already sort of proving themselves, already proving like, hey, we don't have to do a turnaround. This business is already working. With the turnaround, you're adding the uncertainty of like, hey, will the new initiatives from the new CEO work? Maybe it will, maybe it won't. There's plenty of times that turnarounds don't work. And so why not consider giving it a couple of quarters and saying, hey, let's see what new initiatives are announced. Let's see what the traction is with the market. Let's see if they're able to turn around the number of, active users on their platform. All the while, like, hey, by the way, there's a good chance that we're facing this sort of stagflationary environment where advertisers may not have the budgets to spend on Pinterest, and it might be spent on other platforms like Google Search, which has held up even better and grown even faster than what you've seen with Pinterest. And full disclosure, I also own Google stock. And so I look at this and I think, why not wait? Sure, you might have to pay a higher price if there's the clues, and it's a possibility. You might not. That's people don't always realize that. Sometimes you can pay the same price after a few quarters while a company proves themselves. It's definitely possible. Now, it is possible you have to pay a premium. There's a good chance of that. I'd say that's more probable. But like, wouldn't you rather pay like this is at least how I'm thinking, wouldn't I rather pay a 20, 30% premium, but know with much higher certainty that, yeah, they've made these changes that are going to result in much greater e-commerce, much greater ad transaction, and why not pay us a premium in the future if you see the traction really happening and the business model really executing and the new CEO proving himself. And so I look at this and just sort of say, well, I'm personally going to wait. I'd love it. If you have a different opinion, I'd love to hear it. So let's pencil out, what is Elliott potentially playing for, and what arguably you'd need to see for this to work from here. This is still a sizable, reasonably sized company, $10-20 billion company. This year I'm penciling out, let's say 7 to 12.5% growth for the year. I'm penciling out margins that they are nowhere near. Last year they didn't even get this high when they had this sort of record, profitability that was unexpected. And so I'm penciling out 30 to 35% profit margins, partly because their gross margins are so high, around 80%, slapping on around 15% tax rate for this business. And then what's sort of the growth rate that you get in the years ahead? How is this business going to compound at the years ahead? And I think in order to get an attractive return, you really have to pencil out a minimum of 10% annual growth for the next 5 years, or arguably really to get the real home run type of return, you're going to need to pencil out 15% growth, which once again, they're not at. And it's going to get tougher for them as long as effectively their user base continues to shrink. And so that is, I'm penciling out what's the upside that management can be, or that Elliott Investment Management can be playing for. This is a hypothetical valuation framework. Of course, stock price can go way higher, way lower. I just want a framework to understand, okay, what's the upside here? Am I missing something? Because if I saw Elliott was buying this and then I pencil this out and say, oh, using fairly conservative assumptions, I'm getting 500% upside, and that's sort of my, like, a medium base case low scenario, then I'd say, whoa, this gets super interesting. But when you have to bank on 10 to 15% growth, and let's say a 20 to 25 times earnings multiple 5 years out, plus margins that they're nowhere near currently. So this is also another step that you're going to have to see management take. So management's going to have to cut costs while accelerating growth. No easy formula in order to get, let's say, 200% upside in a high case scenario. So this will be tough to see. Maybe they can pull it off, but this is a little too tough for me. I'd rather look for things that I think are a little more conservative or easy to underwrite, where you can say, oh, this trades at a discount to, let's say, a take private value, and it has 200 to 300% upside. It has a long history of outperforming the market. That's what I'm looking for. And I call out those types of companies to my Unrivaled Investing subscribers. If you enjoyed this video, please make a point of hitting that thumbs up, hit that like button, and thank you for watching Unrivaled Investing.